We get a breakout today to all-time highs. If it can hold that today, right? If we don't give this all back up today and finish back negative, you'll have a breakout. And if we can hold this through Friday, you'll have a breakout, which should allow markets to start to trade higher here short term. But this morning, futures are pointing up extremely strong. And, that kind of gets us into, what you need to know before the bell this morning. Yesterday, as I said, Fed cut rates. And here's the interesting thing about yesterday. So we'll zoom in here just a little bit. The market put in what's called a shooting candle yesterday, and that was where the market opened up well above the market, sold down everything. We actually kind of broke out to new all-time highs yesterday early in the morning, sold and then sold off a bit, and then again that really sharp spike took us to all-time highs as the Fed announced that 50 basis point cut, then gave all that back up and ended negative for the day. So first of all, we've had this building resistance at these kind of all-time highs now for the markets, and that big reversal really kind of was a rejection at that major kind of overhead resistance. So I kind of went to bed last night going, okay, well, we got the Fed rate cut in here at all-time highs and big rejection, so we should get potentially some follow-through selling in the morning. Well, that's not going to be the case. This morning, we're going to break out again to all-time highs. So again, if this breakout is going to hold, now we're on a buy signal, as we've talked about before. So again, that's supportive of this move higher that we've had here for a while now. We got this buy signal back, about a week or so ago. Markets are not extremely overbought, so there is the ability for this market to try to push a little bit higher here today, and we're going to be overbought today with this rally. And of course, markets can stay overbought a little bit longer than you would think. But again, we get a breakout today to all-time highs. If it can hold that today, right? If we don't give this all back up today and finish back negative, you'll have a breakout. And if we can hold this through Friday, you'll have a breakout, which should allow markets to start to trade higher here short term. But again, we are kind of moving into overbought territory. One of the other things that that we've kind of been paying attention to is that we've had this very, very nice rally in the markets, but you've had a negative divergence in both relative strength and momentum. So, you do have underlying participation that is weakening in the markets. However, retail investors and professional investors are underweighted equities right now going into October. So again, if this market does break out to all-time highs, that catch-up in allocations could provide a bid to the markets. Now, that's the bullish side. The bearish side, of course, is we have buybacks going into blackout. That's removing a buyer from the markets. And again, we still have the risk, kind of upcoming election risk and other things that are just ahead of us, earnings season about to kick off, that could certainly limit upside here near term. So again, there's nothing bearish about the markets right now and what's happening. And today, if we do break out to an all-time high and are able to hold that through Friday without giving it back up again, that would be a bit of a bullish development. On another side, though, talk about bonds here. We've been talking about for a while that bonds have been very overbought. Yesterday, we saw a fairly decent reversal in yields after that Fed rate cut. Bond prices did come down. We're about to touch the 20-day moving average. So this is the first decent little correction that we've had in bonds here short term. So that should provide us a setup. We'll see how bond markets respond today to this 50 basis point cut. If they start to kind of think about, the risk of a further economic slowdown because the Fed is cutting rates now, is that because of economic weakness? The theory of the stock market is that the market's cutting here, more liquidity, more accommodation, no recession. Bond market still suggesting that there's recession risk. So we're going to see how this kind of plays out here over the next, a month or so. But we're finally getting that initial pullback to support to potentially allow a better buying opportunity to add exposure to bonds. Now, in particular with bonds, this is TLT, by the way, just about to trigger a MACD sell signal. And we're not oversold yet to any great degree. So we do have some more downside risk here. So again, be careful jumping in right here. This is the first little decent correction we've had, but I think it might go a little bit further. We could just kind of chop around at this level. We'll see. But if we do get a pullback to around 96, 97-ish, that should be a fairly decent entry point to add exposure to bonds at that point. And that'll be something that Mike and I have been looking for as well, is kind of finding a point to increase our duration, shift some of our really short term into a little bit longer term bonds. But we need a little bit of a pullback here to do that. As I mentioned, small caps and mid caps should actually start to get a little bit better performance. They haven't really performed all that well. Here was this big spike we had in small caps earlier this year, and everybody's like, oh, small caps are coming back, and then we completely gave all that back up. Yesterday, small caps performed decently. They performed better than the S&P yesterday, but still just stuck in a very kind of long-term sideways trading action that has really just been an underperformance relative to other markets. So, again, we'll see if lower rates begin to provide a bid for small and mid-cap companies. That'll be something that we kind of keep a watch on. Value companies also. That's what you need to know before the bell this morning.